Most dividend stocks pay their shareholders quarterly, which is about every 90 days, and that's fantastic. But did you know that some companies pay cash to their shareholders every month? Hey, what's up? I'm Russ, and we're gonna check out 6 solid monthly dividend stocks for you to consider. But be sure to let us know in the comments below who your favorite monthly dividend payer is. Now, no investment is perfect, and there are a few drawbacks to owning REITs that you should be aware of, like how they can be sensitive to changes in interest rates, which can affect their borrowing costs and profitability. REITs are subject to risks associated with the real estate market, like economic downturns, oversupply of properties, or changes in consumer behavior. And finally, because REITs must distribute a large portion of their taxable income to shareholders, they may have less flexibility to reinvest in the business or pursue growth opportunities like other types of companies do. But there are a few pretty nice benefits to owning REITs that pay monthly dividends, because you receive a predictable and steady stream of regular monthly income, and reinvesting dividends or compounding can happen faster every 30 days as opposed to every 90 days. So we have to start with the company that actually trademarked the monthly dividend company, Realty Income, ticker O. It was founded in 1969 with the goal of generating a reliable monthly income for investors, starting with a single Taco Bell property and now owning over 12,200 properties in all 50 states, as well as Puerto Rico, the United Kingdom, Spain, and Italia. Now, Realty Income makes money by owning and leasing commercial real estate properties to a diverse group of tenants like 7-Eleven, Walgreens, Dollar General, and Walmart, among many others. To date, Realty Income has declared 632 consecutive common stock monthly dividends throughout its 54-year operating history and has increased the dividend 119 times. Realty Income has a Simply Safe dividend safety score of 70 and an alpha spread intrinsic value of $58. Realty Income is one of my ultimate and favorite sleep well at night or SWAN stocks to hold, and ideally I would like to buy them around $63 a share. We head up to the Great White North to find our next monthly dividend stock, to find the elusive Ryokan, ticker RIOCF, which was founded in 1993 and was also the last time a Canadian hockey team won the Stanley Cup. Now, I'm not saying it's a case of the Ryokan curse. Okay, I am saying it's a case of the Ryokan curse. But they are one of Canada's largest REITs with nearly 200 properties spanning retail, residential, and mixed-use developments in Canada's major markets, with tenants like Canadian Tire, Metro, and Shoppers Drug Mart, as well as a growing residential property portfolio. According to Ryokan's website, they have paid consecutive dividends since 1995, although they did cut their dividend by 33% following the COVID crisis. Simply Safe Dividends gives Ryokan a safety score of 60, and Alpha Spread gives them an intrinsic value of $19 a share. Now, I don't own Ryokan, and I'd love to hear if you do, but they look like a very interesting company and one that can continue to provide a very predictable and reliable stream of monthly dividend income. Next, we have a BDC, which stands for Business Development Company, and is like a bank that gives money to small and growing companies to help them become big and successful. And Main Street Capital, ticker MAIN, does just that by providing long-term loans and investments in exchange for ownership in the company. They work with many different industries and focus on businesses with annual revenues between $10 million and $150 million. Main Street Capital has never decreased its dividend since its IPO in 2007 and has paid a total of $35.80 per share in cumulative dividends, which is pretty dang cool because the IPO price was $15 a share. Imagine that, buying at the IPO and getting all your money back plus an additional $20 in dividends, plus a share price that is now around $40. Main Street Capital has a Simply Safe dividend score of 62 and an alpha spread intrinsic value of about $42. Now, BDCs can be a little bit riskier, but I've recently begun investing in Main Street Capital because of their stability and dividend growth, and I have been buying below $39 a share. Agree Realty, ticker ADC, founded in 1971 is very similar to Realty Income in that they are focused on acquiring high-quality properties with long-term leases to credit-worthy tenants, of which they have many of the same ones. And these properties are often triple net leases where the tenant is responsible for all expenses related to the property, including taxes, insurance, and maintenance. So REITs like Realty Income and Agree Realty just collect the rent and pass it through to the shareholders like us. Agree's dividend has been growing nicely since 2012, but they did cut the dividend by 22% in 2011. Simply Safe tags Agree Realty with a safety score of 61, and Alpha Spread gives them an intrinsic value of $63. I think that Realty Income and Agree are both very similar, and while Agree does have that dividend cut to their name, they are still a very good monthly payer, and I would be looking to add to them around $60 a share. Founded in 2007, Apple Hospitality, ticker APLE, is a REIT that owns a portfolio of 220 hotels across the United States and focuses on owning premium branded hotels, which are typically operated under franchise agreements with major hotels like their 119 Hiltons, 96 Marriotts, and 4 Hyatts populating their portfolio. Now, while future lockdowns will always be a risk to the hotel industry, Apple's well-known and established brands should continue to drive revenue as long as they can be open for business. Apple had consistently been paying 10 cents a share per month until COVID happened, and while they're currently at 8 cents per share, I think they'll aim to return to their historical 10 cents a share per month payout. As of this recording, they're at 96 cents a share annually and did pay out a bonus special dividend of 8 cents a share in January of 2023. Simply Safe gives Apple a borderline safe score of 50, and Alpha Spread has an intrinsic value of around $23. Apple is still recovering from the COVID pandemic and I think could face a few more bumps in the road, but given their brands, low debt, and payout ratio, I think they could be an interesting 5+ year investment under $20. Stag Industrial, ticker STAG, began in 2011 and owns and rents out buildings to companies that produce and store things. They make their money by charging rent and hoping that the value of their buildings goes up over time. And as Stag investors, we can also make money from the rent and growing value of those buildings. They have 562 buildings in 41 US states, with their top tenant being Amazon at only 3% of the portfolio. But check it out, no other tenant is over 1%, and the top 10 only make up 10% of their overall portfolio. And what has investors so excited about Stag is the possibility for growth, with their share of the $1 trillion industrial market clocking in at only 0.7%. One knock on Stag is their slow dividend growth, but it has been raised every year since its inception. SimplySafeDividends.com gives them a dividend safety score of 45, and Alpha Spread tags Stag with an intrinsic value of $28. Now, ideally, I would like to increase my ownership in Stag around $30 a share, and I'll likely just collect the monthly dividends until Mr. Market presents us with a much lower price quote. Now, every weekend, I share my latest portfolio moves in a free newsletter that you can sign up for below, and check out the other affiliate links that I have in the description where you might save yourself a few bucks. And if you were helped by this video, help our channel with a like and subscribe if you haven't done so already. Now, we talked about Main Street Capital, and they're a relatively new position for me, and if you would like a bit of a deeper dive into Maine, plus find out what other high-yield dividend-paying company that I just recently started investing into, click the floating little box next to my head, and if you do that, I will talk to you there.